Yesterday, Wall Street went hunting, and that meant today you were in one of two camps, the hunter or the hunted. And if you were a bear, you became liquidity to the market. With every short squeezed on Friday as stocks cap off a fantastic week in style, we need to discuss where we go next. But it isn't all good news. Moody's just cut the US outlook from stable to negative, and while the market loves to climb the wall of worry, we need to talk about what this means for yields next week. And with a looming government shutdown, join us as we discuss stocks and the financial markets together. Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. It was another one of those crazy days. The Nasdaq 100 up 2%, an entire index. Everybody put on gains today except Disney, but we saw broad-based buying in energy, real estate, industrials, healthcare, everywhere, utilities, basic materials. It was just a broad-based buy session on the SP 500. Everybody was hitting the buy button. But let's hop on the charts and have a look at it. So this is something that I normally do at the end of every video, and you could see we had a stellar green day, and all this topish formation you saw in the last 3 or 4 days, that was actually a bit of a trap. Wall Street said we're gonna entice bears to come in here, have a capitulation day for them to add on their longs, and then they all got squeezed. And this is what this was. This was a bunch of people who were short, were squeezed, as well as people just buying into next week. And it's really telling because we actually just made a new higher high, because all we really have to do now is keep above 4339, and it probably means we go higher into November, into December. Now we had a very crazy Friday. Look at this, the Nasdaq 100 up 2.24%, the S&P 500 up 1.5%. So this is the S&P 500 annual returns based on the day of the week. And have a look at this, Monday, 72.7% return. So if you had bought Monday morning open and closed Monday morning close, you'd be up 72%, absolutely wild. So what does that mean Monday? Based on the stats, we probably add on to this number right here. Stocks do love a good Monday. Stocks have been brushing off the Monday blues, but the market is still fearful. We were in extreme fear about 2 weeks ago, and we're now very close to the neutral section. And it just goes to show how sentiment can flip on a dime. But if we have a look at the sentiment survey, we saw the biggest one-day shift in bullish sentiment in a very long time. 18% increase from the week prior, as well as a huge bearish shift. And it's very clear that the AAI sentiment survey, these members aren't very long-term focused, but let's look long-term. Let's look 12 months out. Forward earnings expectations as well as earnings growth. According to Carson Research, they predict that in 2024, S&P 500 earnings should come in at $241, which is actually an all-time high from June 2022 at $237. And this is one of the reasons why we're seeing a huge rally this year and in the last week, because the truth is the market is pricing in this. Earnings are looking to make an all-time high in 2024. Now, this is based on earnings growth as follows. Q3 2023, where expected growth is about 4.1%, and we're sort of seeing that at the moment. And this is in line with expectations. In Q4 2023, we're expecting 3.2%, then 6.7%, and then a huge 10.5% in Q2 of 2024. So 90% of S&P 500 companies have reported earnings, and current earnings are looking good. Current earnings have come in significantly better than expectations. In fact, 5.7% better, which is up from a 3.2% surprise in Q2 of 2023. And it's above the 3.7% COVID range. So we beat current earnings, and earnings are increasing into 2024. Let's move on to Treasuries. They didn't have much effects on stocks today. Today's market movements was more of a short squeeze and just broad-based buying. Fund managers allocating stocks to their portfolios because they have been underweight equities. We saw some of the long bonds, they fell. The notes did increase, and the bills were very mixed. But all in all, it was a very mixed day for bonds and T-bills. And to be honest, based on next week's news, the government shutdown, etc., US Treasuries are going to be extremely volatile based on next week's movement. I found this article from Reuters. Long story short, US yields on Treasuries rose sharply after a much weaker than expected 30-year bond auction, which saw poor demand after solid sales of 3-year and 10-year notes. So even though the 30-year didn't perform well, the 3-year and 10-year did, which means people are adding duration from bills onto notes. The surge in yield yesterday was just a short-term air pocket, said Brian Reynolds. The 10-year now is in a range of about about 30 basis points lower than last week, which is great because this means we're holding the rally that demand for bonds has gone up, he added. So while the 10-year is below last week's range and seeing demand, bond auctions are still a big event for traders. On bond auction days, we're seeing market swings of close to 1% on the SP 500 and more than 1% on the IWM, especially the 30-year auction. But where does this leave us with rate cuts? We should see the first rate cut around May. This hasn't changed since Powell's speech yesterday. We're expecting 4 rate cuts through to 2024, and we should get to the lower band of 4%, and in 2025 as low as 4%. But rate cuts aren't necessarily bullish. I'm going to play devil's advocate, and this is trading days from the first Fed rate cut to the S&P 500 market low, and on average it takes 195 days to get to the market low, which is about 23.5% after the first rate cut. But I did go ahead and look at all these dates, and what is the number one thing you see with all of these? It's a recession. We haven't technically entered a recession. We are on track for a soft landing. Anything could change. I'm actually in the camp that we probably will see a recession, but a lot of these dates there was a major recession, and if we haven't seen a recession, these figures might not be true. So stay the course, and I'll keep you guys updated on everything. Market breadth has kind of improved. This is the percentage of stocks above the 200-day daily moving average, 15% of stocks, and you can see right here we had a low of about 27% of stocks were above their 200 daily moving average, and we have seen a huge movement in the markets, but not a significant move in the percentage of stocks above their 200 moving day. A lot of people will see this as bearish. I personally see this as bullish because when the market does broaden out, and it will, we're going to see this number move higher and the markets as a whole move much higher. Gold has performed very well this year, but terribly in the last 2 weeks. It was down 1.38% today. There is some very, very bullish sentiment coming in. Big traders have gone from net short gold to net long. And normally when we see this type of action, it leads gold onto very, very long bull runs, such as it did in 2018, 19, 20, and again in 2022. So we're going to keep you updated. What about oil? Now, oil, like gold in the last week, and especially in the last month, has seen some very bearish price action. I mean, the XLE down 4.47%, and the USO, the United States Oil Fund, down 5.34%. And this is because of global demand. Oil settled slightly higher on Friday, but is still down 4% for the week after sell-off concerns on the global economy is on the verge of a slowdown that'll hit demand. Oil, everything comes down to demand and supply. The Saudis have committed to cutting 1 million barrels, and that's because they're not seeing demand, and that's why oil price is falling, and subsequently oil stocks are falling. But let's move on to seasonality for stocks. And this seasonality chart has paid us in spades. We said that yesterday we were very bearish, okay, because it was the worst potential day in November for seasonality, and we saw a huge sell-off and then a whipsaw back. And that's exactly what I said in yesterday's video. Be prepared to see a huge bullish run up. That's the case, and that's exactly what we saw. From about the 0% mark, about 1%, as high as 1.3%. That's exactly what we saw in the S&P 500. So this chart right here has paid us very, very well. You do have to adjust for the beta risk, but what are we expecting into the rest of November? We could see some form of a sell this week into the government shutdown, into a very big economic data we have next week, and then we could bottom around here. Remember, on the 15th and 16th, we do have the 10-year and 30-year bond auctions too. We could make a low around this time before we rocket into the rest of November. So risks do lie ahead, but hold the longs. We are long, and we're going to continue having conviction as we look further into the rest of Q4 2023. Now, before the New York Open yesterday, I tweeted this: 4340 is a huge gamma zone. Dealer support will hold that level. And this was in pre-market when markets were moving a bit lower. The S&P 500 was moving lower. The NASDAQ was moving lower pre-market. And I said that if dealer support will hold that level and will rocket up to 440. And that was the price at the time. We held this level and we rocketed up. And let's hop on the charts and have a look at this. So this is the S&P 500 daily chart. If we break it down into the 3-month, you can see here that we came to as low as the 4356 level, not quite 4340. I thought we'd get here, but in this range, and then we rocketed up all the way to 4435. And we actually did break this high right here, which means we made a higher high. And now at above the 440 level, guys, CTAs are going to kick in. We did see some risk off this red candle right here into the weekend, to be expected, but open Monday. Mondays are a very bullish day in 2023. We've been long since this area right here. It's been a very good trade. A ton of bears were trapped up here, up here, up here, and then we had a huge rocket ship in the S&P 500. If we actually look at the NASDAQ has performed incredibly well. If you look at the year-to-date chart, it's just gone absolutely higher. We did make a lower low, but we have broken that trend now, making a higher high and closing at the highs. And the next level that we can test is this 15,720 level right here. And we probably go ahead and break that next week in some form of a volatility event that occurs. But one of the reasons why we saw such huge selling wasn't just shorts being covered, it was also dealer positioning. We said that yesterday, the call resistance level was actually at 4,400. It has now moved to 4,450. That's a very, very bullish sign. Secondly, we did switch from positive gamma to negative gamma. And what that pretty much means is in a negative gamma condition, dealers will buy into strength and sell into weakness. In positive gamma, they'll sort of sell into strength and buy into weakness. And what did this mean? Once we held level right here, 43.50, we just went up. We broke this level, this level, this level. It just meant that buyers were just buying into all of these levels. They were buying into 4,400, 4,420, 44.30. And that's why we didn't see a massive sell-off, especially in the NASDAQ towards the end of day. We did see a little bit of risk off after hours, but during the market hours, it was just an upward trend right up until close because dealers were just buying into strength. Now let's move on to dark pool. We got the TLT right here. The number one biggest trade happened at this level. So we did probably get a short here. This could be this trade being closed off. It could be a trade being entered, but I doubt dealers are actually probably shorting these levels in the TLT. So moving on to the Qs, you can see we saw this trade yesterday. We said that maybe it's a bearish signal. We now know it's not because we rocketed up. And let's say these are shorts, right? This is a very good thing if this is a short because number one, we are significantly above this level. Maybe they already covered and this is what led to some of the selling, some of the buying. But if they haven't, when we get down to this level again, let's say we sell down, they're going to support it because they're going to cover their shorts for break even. Very, very good that we're above this trade right here. Very bullish price action. Don't fight the trend. I say it every video. Now moving on to the S&P 500. Very similar situation. A lot of bears were trapped up here, but dealers did take advantage of the lows yesterday right there. And there was some pretty weird trades happening at the end of day, but nothing too significant. Equal weight. And look at this right here. The sixth biggest trade since inception showed up, as well as a trade right here at the lows. Honestly, I think this is again very, very bullish. We go above it. They're going to act as support if it is shorts. If not, it probably is a buying and they're going to support this level. Anyway, very, very bullish price action. Let's look at some unusual options activity. It was a call fest. Look at this. 52% calls to 48% puts. Calls were just running rampant. Apple, 250 million calls to 89 million puts. Same with the big ETFs, 503 million calls to 389 million puts. And this is why we had this gamma flip, because we saw huge amounts of put notional value in the last 3 months, but it was a very big day of volume today. 43 million options contract traded against an average volume of 39 million. Thank you so much for watching, guys. If you like this video, give me a like, subscribe, share this video with your friends, leave a comment. I love you guys.